Welcome back to another episode of Hard Money Dispatch, the show that demystifies sound money and helps you see the system for what it is. Today's guest is Kevin Bell. He is the founder of Kadena Bitcoin, which is a decentralized peer-to-peer Bitcoin borrowing and lending platform where borrowers and lenders maintain full self-custody of their Bitcoin. Today, we'll be talking about Bitcoin credit markets, the Cadena platform, counterparty risk, cost of liquidation risk, and all things of this nature. So if you're interested in borrowing against your Bitcoin while maintaining custody of it, this will be an interesting episode for you. Kevin, welcome to the show.
Thank you, Brian. I really appreciate the platform. Looking forward to it.
Of course. So to start things off, most Bitcoiners are generally anti-debt. It's typically something we associate more with the fiat system. So where do Bitcoin native credit markets fit within a long-term sovereignty Bitcoin maximalist mindset?
Yeah, it's a great question. I'm not 100% sure it does. I think to me, Bitcoin is money. And for it to function effectively as money, it would need to have all the tools that are available with other currencies. And credit markets are a big part of that. When you look at the world of money, as we know it, a good chunk of that is actually credit. And so one thing that really kind of stuck with me is I moved to Costa Rica about 3 years ago. And they don't have the banking system that we had in Canada or take for granted in North America. And, as a result, it's really hard to borrow money for a business, to buy a house, to get a car. And so a lot of times I think people in, developed markets look at the emerging markets and, the people are poor. And from my perspective, that has a lot to do with the availability of credit and credit markets and the function that they can have for creating wealth in a society. So to me, it's, very important that we develop credit markets on Bitcoin because there's so many advantages to Bitcoin as money that having credit markets is just a natural extension of that.
Makes sense when you put it like that, 100%. Now, Cadena emphasizes self-custody, even while borrowing and lending, which is sort of a revolutionary concept. Can you walk us through how that actually works at a practical level? Because I'm super curious about this myself. And how does it work without introducing counterparty risk?
Yeah. And so to me, this was the whole point. And, I reached this point where I was building a house in Costa Rica and I had a house and mostly completed in Bitcoin. And then I was looking at the borrowing options, and borrowing against the house was pretty expensive. And then I was looking at the Bitcoin solutions, and, from what I could tell at the time, they were all custodial. I would send my Bitcoin to a third party. They would hold it on my behalf and hopefully give it back to me. And in 2022, there were a number of incidents in the Bitcoin space with Celsius and BlockFi, and a number of clients ended up losing money. And, when I read the white paper, I was relatively new to Bitcoin. So, this was around the introduction of the ETF. And it seemed to me the entire value proposition of Bitcoin, as Satoshi laid out at the very beginning of the white paper, was that the primary benefits would be lost if trusted third parties were still required. And so it just didn't make sense to me that I would need to send my coins to a trusted third party in order to borrow against them. My experience, I spent most of my life trading foreign exchange and selling foreign exchange derivatives. And whenever we sold a derivative where there was a contingent credit risk, we would have to insure ourselves against that counterparty. And so, to me, it was very clear if I was sending my keys to a third party, no matter how secure it is, there's risk that I'm not going to get that back, whether that's operational risk or, credit risk, poor management, and any number of things that could happen. And so to me, that was the starting point of what I wanted to build. And it absolutely had to be built on Bitcoin. And see if it was possible to, reduce trust in the system. And so finding the right developers and programmers to do this was quite a journey. And so that was kind of, the first half. And then, in terms of how we do it, so we run a peer-to-peer exchange at kadenabitcoin.com. And, we're in the process of putting out a new version, which I'm quite excited about. The clients meet at the website and execute these transactions. And because they're Bitcoin transactions, they need to be signed. And so we've created an app, which is really the security around this, which signs these transactions. And the first time you use the app can create a 12-word seed phrase for you. It's an open source app, so you can see that it's a fair process to create that seed phrase, or you could create your own 12-word seed phrase, or you could connect any 12-word seed phrase wallet to Cadena. And so the app stores the seed phrase, and when you sign the transactions, we're getting the signatures. We're not getting the seed phrase. So they're securely held on the app on your phone. And so that's how we maintain full self-custody the entire time. And so when the transactions are executed, we're taking UTXOs from the borrower and the lender, and we're creating this collateral pool on the Bitcoin blockchain. And so it exists. You can see it on a block explorer. And then at the end of the contract, it's automatically settled back to the address that was initially debited.
Wow, that's fascinating. So you have to create a wallet, but it's not used to actually hold the coins when you're borrowing, correct?
So within Cadena, with the app, we have the app in the App Store and Google Play. Finally, Google Play as of this morning. And, there's some back and forth and issues that go on, and whether it's a wallet or an exchange. And so the app is a wallet. And so it's creating an address, and or you're connecting an address where those coins will be used to fund those transactions. Is that more clear?
I'm just trying to make sure I understand here. So you create this wallet, you have to deposit your collateral into it.
Correct. Yeah.
So, but it's a self-custodial wallet, and that's what makes it different.
That's exactly right. So it's fully self-custody.
Sure. Okay, got it. And when people hear Bitcoin lending, they tend to think of the platforms that blew up last cycle. You mentioned Celsius. There's so many others like Fold and BlockFi. What fundamentally makes Cadena different from those models, maybe in addition to the self-custody thing we just clarified?
I was actually just reading an article about Ledden, and Ledden sold a number of bonds, and it's an incredibly innovative financial transactions, and my hat's off to them. Those bonds were sold at 3.5% yield above treasuries, and so the investors in those bonds are earning 7.2%. And so we have a marketplace where lenders can come in directly with self-custodied Bitcoin and connect with borrowers directly with self-custodied Bitcoin. And, through that, we're able to eliminate this trust. But you can understand the credit risk perspective. If you're giving your coins to somebody to hold, there's a risk that you don't get them back. The easiest way is to look at the credit ratings of these companies and see what the risk is in their bonds. I would say they're, 2 to 5%. And so realistically, that is the possibility that you're not going to get your coins back. And if you're willing to take a 1 in 20 or 1 in 50 chance, that's kind of the first risk. And the second risk with these platforms, so the other differentiating feature is that we don't have liquidations. We create this collateral pool, and it's not liquidated until the end of the loan. And at the end of the loan, the collateral is used to pay back the lender, and the remaining collateral is the borrower's collateral. And so with the existing custodied model, if Bitcoin's price falls substantially, those clients are liquidated. the Bitcoin ends up being sold to cover their loans. And that kind of creates this risk that they need to top up with additional collateral. If they had the collateral at the beginning, they didn't need the loan. They would have had the dollars to do that. And so then you're in the position where you're assuming that they're topping up with Bitcoin collateral. And so at this point, Bitcoin's already fallen by close to half. And so the collateral that they thought they had is worth considerably less. And so, and if they do contribute the collateral and Bitcoin's price continues to fall, it's a recipe for losing all your entire stack. You're essentially, doubling down every time. And so it's an incredibly risky model. And by eliminating these with Cadena's product, if Bitcoin's price has fallen by more than 50% at the end of the term, then the borrower won't receive any money on the final settlement. It will all go to the lender. With the traditional lending model, if Bitcoin's price is down, and it's not even 50%, it's to be 80% loan to value, so it falls by about 41%, you're going to get liquidated. And that really doesn't serve you. And you're much more likely to be in a situation where you're going to get liquidated by Bitcoin being down 41% at any point over a year than Bitcoin being down by 50% at the end of 1 year. And, we can express that cost as an interest equivalent. And so I think when borrowers add up the additional risk they're taking with counterparty risk and liquidation risk, it becomes, reasonably obvious that the custodied solutions have some additional costs that aren't necessarily in the terms of service. And, we do our best to avoid that with Cadena.
Right. There's definitely layers of risk with custody lending solutions. And you mentioned
it's especially and the challenge again is because Bitcoin is such a volatile asset. If Bitcoin was less volatile, these would be less of an issue. But, here we are sitting, end of March 2026, Bitcoin's down roughly 50%. And the reality is a number of people had to deal with this issue. And, hopefully don't need to deal with it going forward, but we are close to the lows.
a large number of people from now. What I heard, this is just a rumor. I haven't verified it, but I heard somewhere that about 25% of Ludden's customers were all liquidated in the span of, several weeks when that huge dip down to 60,000 happened. And I don't know the facts for sure, but it seems plausible to me because like you were saying, if your loan to value ratio goes to, on Ledden, I believe it's 70% for a margin call and 80% for a forced liquidation. Yeah, drop of 40% more than achieves that real quick. And you may not even, like in this case, I mean, it happens so fast. You may have gone to sleep one night and then gotten a margin call while you were asleep and then been liquidated by the time you woke up. So even if you had extra collateral to top up with or funds to repay a portion of the loan, whatever you have to do to bring your LTV down, you may not have even gotten the chance. So yeah, those are some risks there.
I have to add to this. I think it's horrifying because you're getting the margin call at the worst possible time. And you're right. Sometimes it all happens very quickly. You didn't get notice. I was interacting with somebody on Twitter the other day and, whatever, went to their spam. They never got notified. And so one of the people on my team prior to joining, and he still does, he's built an app for people to get notified when the margin calls are going to come. And to me, that's just a sign that, we're kind of, I'll just say this. I don't think we need to rebuild TradFi on Bitcoin. Bitcoin is something different. And, the way we're going to interact with it is going to be different than with this traditional TradFi business. And, a lot of the existing custody business, it's really a spread lending business. They're, charging And as long as you're able to do the paperwork efficiently and make sure you liquidate your clients on time, there's really very little risk. And, it's not, I'm just optimistic that there's other ways that can help clients.
Definitely. And I don't have anything against lead-in. I mean, it can be useful. I'm not against having some portion of one's Bitcoin in a custodied provider because, it mitigates the risk of the self-custody risk of making a mistake. Um, Anything you could do that could potentially screw you out of your coins, but
But
the one thing I do take issue.
I have to say one thing. Like, Ledden is an incredible company in the space, right? Innovative, well run, and was able to survive the issues of 2022 because they were well managed. I'm certainly not, you know, pointing to any of the players in the space now, and there's a number of them in this space, and it's been, an evolution in Bitcoin, and I would point to Ledden as one of the examples of obviously one of the better run companies. And, you're seeing the growth and adoption there. But, um, I'm just pointing out some issues with the model and, again, trying to get to a place where we're transacting with Bitcoin as Bitcoin was intended to be transacted.
Yeah, totally agree. I'm sure a ton of Bitcoiners would prefer, even those who are not even considering lending, might consider it when they learn about a platform that allows them to do it while still having things in a non-custodial wallet. But what I was going to say was the one objection issue I do have with Ledin is the fixed loan to value ratio. They only have one option, and that's a 50% loan to value ratio, which is a little on the high side for something as volatile as Bitcoin. Because as we were just discussing, if you start off with a loan to value ratio that high, the odds of you getting liquidated, or at least a margin call in the next drawdown, are extremely high. So, what does Cadena have in terms of the LTV options for users?
Yeah, it's a great question. What we had initially when we put out our first launch was we had an 80% loan to value and a 50% loan to value. So, and we had different tenors. We had a 1 month loan, 3 month loan, 6 month loan, and 1 year. And so in this latest iteration, we're simply going with a 1 year loan, at 50% loan to value. And over time, if there's some market adoption, we can continue to roll out the other terms and tenors. Like, everything's still available by API. It's just a question of what we're showing on the screen. So they're all still there. The other thing, I'll say is we've had some interest from miners for longer term loans. And so people looking maybe 3 years, and real estate investors looking for even longer loans in terms of possibly 5 years. And so, I do expect over time, Bitcoin will develop a yield curve like everything else. The other thing I just want to point out is our platform is a peer-to-peer platform. So we have borrowers on one side, and the other side of that transaction is a lender looking for a fixed fiat yield. So the trade is, very similar to MicroStrategy in that, you're giving these investors a fixed yield using that money to purchase Bitcoin. And so this essentially allows people to do that on chain without the third parties of, MicroStrategy, your brokerage account, Coinbase custody, the government looking at your money and everything else. And, there definitely are some people who have interest in that.
Yeah, totally agree with that. So, looking through my talking points here, we've already covered like half of them, just naturally. They all came up. So, let's just move on to, you guys have an upcoming 2.0 release. What's changing under the hood at Cadena, and how does it move you closer to your long-term vision for peer-to-peer Bitcoin finance?
To me, this is, I'll acknowledge, I think Cadena is a bit early here. And so, I think we're probably the first to market with this type of product. And so really excited about the opportunity and the conversations it leads to with people. Um, you know, in terms of where I think we might have missed the mark a bit and didn't hit the product market fit I think we hoped for with the first release was we denominated the loan amounts in Bitcoin. And so it was 1 Bitcoin, zero point 0.1 Bitcoin, and 0.01 Bitcoin. And so it became incredibly complicated for people who were looking for a $10,000 loan to figure out how many units of Bitcoin at 50% loan to value. Anyway, we've changed it so it's just a US dollar amount. It's on a slider, loans amounts from $1,000. We capped it at $100,000 now, but there's no cap on the number of loans that people can get. And so for me, this was a big step and kind of allows us to go back to a number of companies who have expressed interest, needed the loan amount to be in dollars. When people are buying mining equipment, they're buying $6,422 worth of mining equipment, not half a Bitcoin. Anyway, so going forward, in the second quarter, what we hope to do is add stablecoin and fiat on and off ramps. And so that will give more users access to the market. Within our regulatory structure, I'll just say this. So we're a Bitcoin service provider registered in El Salvador, and we are a non-custodial service provider. So we don't custody Bitcoin at any point in time. And similarly, with fiat on and off ramps, we're not planning to custody the Bitcoin, but really, or fiat or stable coins, but do that through partners. And so we're excited about doing that. The other capability with the technology is the ability to add other currencies. So we look to add other major currencies, definitely the euro, possibly gold as trading pairs in the second quarter. And I don't really look out, in terms of my product roadmap, more than about 3 months because we're in this incredibly, quickly changing space. But in terms of future visions, like I look at this technology and what we're able to do in a decentralized and sovereign way now as human beings, basically being able to hold a fixed fiat yield, hold Bitcoin or hold leverage Bitcoin exposure in full self-custody. And I see it as, the foundation for banking services. You can, slice and dice this technology into 36 monthly payments or a mortgage or, and have it all on the blockchain and free ourselves from some of these third parties that have substantial control over our financial lives now.
That's great. Yeah, I love that way of framing it. Definitely appealing to me and probably a good chunk of my audience. And here's another question that will be particularly relevant for a chunk of my audience, I believe. Who's the ideal user of Cadena today? And is this built more for advanced Bitcoiners, or can someone earlier in their journey who's still kind of figuring things out realistically use it safely?
Yeah, it's a great question. I would say, with the first release that we had, it was very much early adopters who were the people who liked it. I think people who were willing to jump over a few fences to, deal in a full self-custody product. And what we've tried to do is just really smooth that out with US dollar amounts. And, a bit of the user experience. When you meet and you execute a transaction through the website, it still needs to be signed with the app. And I would put the signing with the app as equivalent of doing the paperwork with a, traditional lender. And so to me, that is really the, advantage of the technology and how it becomes scalable is we're automating this process. Mm-hmm. And so, we've pushed, the app, and for us, this is this incredible technology that we're trying to tell everybody about. But at the end of the day, it's just something that makes it convenient to execute these transactions as opposed to, signing, faxing, filling out a form and doing this type of transaction. So it should be very easy to connect a wallet and sign these transactions. And really it's that basic. This is the advantage of Bitcoin is that it's programmable money. And, we used to take hours and days can be done in minutes and hours now.
Nice. Sort of bringing all the paperwork on chain, so to speak, sounds like. So, zooming out, starting to wrap things up here. If Bitcoin succeeds over the next decade, like I think we both believe, most of us believe at this point, how do you see borrowing lending evolving compared to the fiat system we're hopefully leaving behind?
Boy, this is a great question, and I'm going to be a bit woohoo. You're going down the rabbit hole. I can tell you that the fiat worlds and the Bitcoin world are kind of connected. So what I expect is over time, through the platform today, we're seeing transactions take place at, I don't know, 11% on average. 11% is a pretty attractive yield for a lender when you consider, the stock market's gone up 9% a year for the past 100 years. A guaranteed return of 11% for assuming the risk that Bitcoin's price falls in half over that year, and we can discuss that. You could hedge yourself from that risk by buying an option, and it would cost you about 2%. And so I would say investors could get and I'm using air quotes, this isn't investment advice, but a risk-free yield in Bitcoin of 9%, 9 to 10% after hedging themselves from this risk. To me, that yield is simply a fixed income expression of what we know Bitcoin is, which is better money. And so we see that expressed when you add it to a portfolio, it's going to improve the risk adjusted return of that portfolio. This is expressing it in a fixed income way as yield, and that yield is gravity, attracting fiat money to Bitcoin. And so, I think between adoption as payments, Bitcoin's a bit of a one-way door, right? Like once you figured it out, I don't know many people that go back in terms of using it as money, using it to pay people, not having to line up at a bank. There's a number of significant advantages in being sovereign if you're where do I see it going? I see more of the same. I see, the adoption, the CAGR, all of these things continuing, and it's slowly then more slowly, but the numbers become bigger. And so, I look at Bitcoin, I'm Canadian, right? So it's probably roughly in line with the amount of dollars now in terms of orders of magnitude. You can compare Bitcoin to the Canadian dollar. And so, I just think it will continue to get bigger and bigger and compete with additional currencies. And I think it will unquestionably outcompete additional currencies. And I think products like this, my dream is that at some point this constrains borrowing and government money printing, because people have an alternative where they can invest their money in Bitcoin, generate yield that isn't available. So I mean, governments are kind of abusing this power of printing money over and over again. And I think this is potentially one way that can constrain that, because people have an alternative of where to invest their money now.
Right. Yeah. It's sort of a gradually then suddenly thing. At least it seems that way from my perspective, because after being in the space for 13 years, it seemed like there was so long where this was just some fringe concept. Nobody took it seriously. I remember the anchors on CNBC just laughing at it when the price had gone up to like 1,000 for the first time, talking, oh yeah, it's going to hit 1,600. What is this thing? Bubble mania. And now all of a sudden there's like CNBC crypto world shows, and it's on the ticker every day. They have the Bitcoin and other crypto tickers every day. And now here we are talking about more or less mainstream type of financial products being built on top of Bitcoin. And I like the way you put it, of saying it's like gravity, that Bitcoin sort of like becoming a black hole. And the more products like this and services like what Cadena provides, the more of those that get built out and attract more users, that black hole is sort of spinning faster, attracting more capital, more mass. And yeah, it's a sort of just a natural thing. It's not something that's really forced. It's all based on Seyfedin Amus puts it in the way that Bitcoin is economic reality, and economic reality asserts itself over time. So there's nothing anyone really has to do in terms of adoption. Although I somewhat disagree in the sense that, I like creating content like this out there because the more awareness we can spread, then it should, in theory, speed up adoption, because a lot of people don't know much beyond what they hear in mainstream news, and the FUD of, it's miners are boiling the oceans, and quantum computer is going to crack your wallet next month, and all of that
Yeah.
stuff. That's like the prominent narrative that's out there. So I'd like to counter that. I'd like to think that it's somewhat productive trying to do that, and that it helps the cause. Obviously, though, what things that you're building and people in your mindset, in your industry, is even more important, I would argue. But I think we all have a role to play in getting us to that point where the Bitcoin economy just kind of becomes the natural alternative to the existing fiat structures.
Yeah. You touched a lot of things there. The FUD is real, right? And it's, incredible how, I don't know, being Canadian, recognized many years ago that the newspapers were really government propaganda, but, it continues, and it does, that net catches a lot of people. And so I'll say that's kind of working against Bitcoin. But I think what really works for Bitcoin is it's in everybody's self-interest to adopt this technology, whether they realize it or not. And to me, it's just a matter of time before people realize it. It's one of those things where it's like, if it cost you $50 to join the club, you'd be like, but it doesn't. It makes you better off financially immediately because you're more diversified and you have a higher risk-adjusted return in your portfolio. So, for a few years, okay, well, your neighbor, who adopted Bitcoin before you, it takes a while before you see the benefits that he's enjoying. But at a certain point, it becomes undeniable. And, for everybody, that's an individual decision. And I think the other piece of it that is really, kind of ties into the FUD is that I owned a mortgage brokerage for a number of years and a financial advisory business. And, outside of Bitcoin and financial circles, people are just incredibly unsophisticated with respect to finances. And so, you kind of don't expect it to change overnight. But what gives me a lot of optimism is just having connected with a lot of builders in the space. It's, I'm pretty convinced there's more being built now than exists today. And so as the user experience improves, as things become a bit easier, and my 80-year-old parents can, use Bitcoin and not be scared by the FUD, then I think we're going to be in a better place, and it's going to take some time.
Yeah, definitely. So, Kevin, how can people get in touch with you? How can they find Cadena and all of that?
Yeah, thank you for this. I'm at kadenabitcoin.com, at Kadena Bitcoin on X. It started to put more content on YouTube and Facebook and Instagram also. So yeah, if there's any questions, please interact through the website. Chat features also. But yeah, any questions, please reach out, and feedback also. Very interested to hear what your audience thinks of what we've done.
Absolutely. And I just wanted to add, I forgot to add this just a minute ago, but the other key benefits of Bitcoin that are even a little more difficult to understand, but make you more of a believer and diehard user, are the fact you can have an asset that cannot be confiscated, and you can transact freely with anyone else in the world without needing permission. And those are the two main freedom sovereignty qualities that I always try to hammer home and try to help people understand that is a core part of the value proposition of Bitcoin. And to tie it into this as we wrap up here, it sounds like Cadena is very much in line with those principles, because being able to have your coins in a non-custodial wallet while also managing finance, doing things that you may have to do to live in a fiat world. I think it's a really good, sounds like an important service. And Kevin, thanks for being on the show. And everybody, we will see you next time. Oh, don't forget to like and subscribe. If you're on YouTube, leave 5-star review. If you are listening on Apple Podcasts, Spotify, and subscribe to the Hard Money Dispatch newsletter. I'll have links to all that and links to Kevin's stuff and Kadena Bitcoin in the description. Thanks, and I'll see you next time.
Thank you, Brennan.